Hey everyone, this is DayTraderRockStar, and this is a market radar video for September 23rd. That's going to be Tuesday. And I'm doing a show tonight, as I normally do on Monday nights. We started off a full-time show, aftermarket show. It starts about 8:30. It is called Cocktails and Candlesticks, and it's the name I'm working with right now. Basically, we just have a good time. It's a hangout. Tonight I'm going to be going over some stocks. I want to go start looking at some short scans, and just doing a lot of market coverage and kind of research session tonight. But normally it's going to be fun music, interviews and stuff like that. So feel free to, any Monday night. It's going to go on 8:30 to about 11 o'clock Eastern time. It's 8:30 at night to 11 o'clock, and again, it'll be on tonight. So hopefully I'll see you on the site. You can ask some questions and stuff. So basically, want to follow up from Friday's call. And again, I'm going to have to toot my horn here because, seeing all the setups on Friday and putting out the watch list over the weekend and discussing and really coming out saying I had a 2-hour down day, which was a high probability of a pullback going into this week. And, I usually work in five-day periods when I put out a watch list and stuff. So, we give it, you have a little time for this to work out. But, everything here pointed to the downside. And I want to go over those signals again. The 60-minute time frame here was oversold, and so was the daily was just crossing over to the downside. So we had these two big time frames here pushing back. And this is where we left off on Friday. And I just want to fast forward this for a second and actually show you. You can see those 60-minute charts just came in, and we sold right off. And we got a full rotation back down here on the 60-minute time frame now. So we had a nice pullback. The Dow ended up down about 102 points. The S&P was down 15, and NASDAQ was about down 52. But needless to say, the dual indicator setup here, that topping signal plus the trend line. I have this red line up here which goes back far enough. And I don't know if you can see it on the 60-minute. Oops, let me bring that back up here. But you can see it on the daily here. It goes back, but I think I was on the 60 here, but there we go. We could go back all the way back down here. It starts right back here. So there was a combination of things we call indicators. The trend line being an indicator, stochastics being an indicator. We even had like a little divergence here. So everything here pointed to a downside. Now, the big question today. We took profits. I took some profits in the TNZ that we were holding over the weekend, and I got back into the VIX because I think the breakdown here on the VIX, or the breakdown here on the market, is still in front of us, and we could see that the 60 minutes got embedded here. It's not giving us that rebound right away. I mean, sometimes it takes a day to consolidate, but normally you get it moved down, you get a reactionary up here. This is showing me a little weakness, just that we're embedded, and taking that in the fact that the daily is just crossing over right now. You can see that crossover. There's a lot of lines up here that kind of distract from that, but we are getting that crossover, and we have that divergence too. That crossover is a little bit lower from the recent high. This high took out this recent high. Remember we talked about gapping up, and I would call this a high. If we gapped up on Scotland's vote, look for selling. So Friday we gapped up and we got the selling expected. Monday we get the follow through, and I'm calling for a little more follow through tomorrow. All right, so that's where the radar is leading us to, is, 60-minute chart, yes, we're embedded to the downside. Yes, we could bounce at any point. And also that underlying trend line, that retracement trend line, is still underneath us. Honestly, this market has rebounded multiple times off of this scenario. It's been holding strength, but, we have that daily crossover. We have a lot of things that triggered up here. Taking out the highs. I love reversals when we take out those highs. We've hit, over 2,000. And then, of course, some of the news here happened at the same time. I just think there's a better pullback here. I think the trade is to the downside a little bit more. So, even though the 60, but the daily is crossing over. We know that even though we get some follow through, maybe we get a bounce, but that daily is going to complete its crossover. And then we could probably start seeing some type of pattern playing out, be it a shorter term pattern or something that we could start putting some trend lines together. But until then, looking for a little further downside tomorrow. I would like to take some profits, if we get a nice spike in the VIX. This could be the beginning of something much bigger, but we could take it day by day. I mean, if we can manage that, this could actually end up going all the way back down here. It would be, that'd be fine. I think we'll notice that over the next couple of days how strong this market is. I want to go over one last thing. We had FT71 on today, and we were discussing the patterns in the market. And really, great call. He was looking at that retest at a 1983 level, and it came right down to that level. I thought it was a great call. It reminded us of this Fed reactionary trade here, and this is a great indicator. I use this also with charting, is when we have a candle that really extends away from the pattern, the overall average volume or average price area. We spike away from it and we spike above it. Those levels really come into play down the road. They become important markers on the chart that we want to pay attention to, trade off of. So this was an important level, and combined with that level and understanding how markets move, we were able to analyze the market and really find the best places where the bounces were going to be. We discussed how the 20-period moving average, the 50-period moving average all play a part, and how to read into when they break out and what the tests mean and how they get back into a pattern. And combined with the stock patterns, we had this rising wedge pattern, which is a very bearish pattern. We had this more of an extended flag breakdown, but then we came down to a real high probability zone, and we expected a big bounce there, and we got a big bounce. And after hours now, we're kind of drifting back down, but overall I feel this market still has some ways to go to the downside. So that's what we're looking for tomorrow. Got a lot of stocks. I'm going to go over them. I'm going to save them for tonight. So if you want to tune in, or tune in tomorrow, on the air every single day, from 8:30 in the morning to 4 in the afternoon, broadcasting the markets, live trading, and everything that has to do, and playing some great music. I like to say so myself. Yes, sirree. So tonight's going to be fun. I'll see you later. I'll hopefully get this out with a little some thoughts. All right, take care.